Good morning. Welcome to today's episode of Morning Well. 1st of July today, start of a new month, start of a new quarter. Wishing you the very best. Slightly changing the format, doing a wrap of Q2, and then we'll see what to look forward to in Q3. US stocks wrapped up their best quarter in more than 20 years. 3 months ago, investors were lamenting the end of the bull market and the longest economic expansion on record, after major US stock indices lost about 35% of their value in less than 6 weeks. The subsequent rebound has been nearly as brisk. As the second quarter draws to a close, we reflect on the gains in equities and currencies. While the COVID-19 pandemic scarred the markets at the end of the first quarter, recovery was the primary theme of Q2. Partly thanks to the unprecedented 1.6 trillion stimulus package from the Federal Reserve and Congress and a surge in trading among individual investors, the rally has lifted everything from beaten down energy stocks to apparel retailers to big technology firms. Countries went into lockdown in February and March and began to ease those restrictions in May and the latest June. For investors, consumers and central banks, fear and panic gave way to optimism. The Dow gained 15% over the last 3 months, while the Nasdaq rose a whopping 28% to record highs. Markets around the world recovered with double-digit rallies seen in the DAX, the Nikkei and the S&P 500 as well. High beta risk-on currencies like the Euro, Australian dollar and the New Zealand dollar performed particularly well, with the Aussie and the New Zealand dollar reaching multi-month highs. Safe haven flows eased out of the US dollar, which weakened against all of the major currencies in Q2. The path ahead for the stock market is less clear, especially with the November presidential election now coming into view. A Democratic sweep of the White House and Congress looms as a potential risk in the months ahead. Analysts say a Democratic-controlled government could likely roll back the tax cuts Congress enacted in 2017, constraining corporate profit margins. The market's rally has slowed lately as a resurgence in the coronavirus cases in some parts of the US and civil unrest sparked by the killing of George Floyd in police custody has dented sentiment. After logging its biggest 2-month percentage gain since 2009 in April and May, the S&P 500 rose just 1.8% in June. The economic picture also remains bleak. Nearly 20 million jobs have been shed since February. Retail sales are far below pandemic levels, and manufacturing activity in the US has also contracted, although at a more gradual rate. Adding to the grim outlook as we start off this quarter was Dr. Fauci's comments yesterday. He said the US is not in total control of the coronavirus pandemic and daily new cases could surpass 100,000 new infections per day if the outlook continues on its current trend. The country is now reporting nearly 40,000 new coronavirus cases every day, almost double from the 22,800 that we saw in mid-May, driven by large outbreaks in a number of states across the South and the West. Gold futures topped 1800 for the first time in 8 years. The metal posted its best quarter since 2016. Oil was not left behind. Oil had its best quarter since 1990. WTI almost doubled in value, buoyed by OPEC plus supply cuts and rebounding crude consumption in post-lockdown China. Precious metals rose across the board, while copper posted the best 3-month gain in almost a decade. In corporate news, Huawei and ZTE are US national security threats. The designation by the FCC is a step towards driving the Chinese manufacturers from the US market, where small rural carriers rely on their cheap network equipment. An Uber and Postmates tie-up would make sense strategically, giving the combined companies a 30% share in the US food delivery market, is what an analyst remarked. FedEx jumped more than 9% in late trading after reporting fourth quarter adjusted earnings of 2.53 a share, topping calls for about 1.53, thanks to an efficiency drive and also a surge in health equipment deliveries. Data to look forward to. ADP data is due later today. American companies probably added about 2.85 million jobs to their payroll in June after cutting 2.76 in May. ISM manufacturing gauge may have climbed to about 49.9 from 43.1, while construction spending is seen advancing about 1% after dropping 2.9% in April. The minutes of the Fed's June meeting are also due. That's your update. Stay safe and healthy, everyone.